Okay, good evening, everyone. I'm putting out a late video tonight. I've just been super busy today, so I wasn't able to get out a video earlier today, but I want to get it out right now. And the other thing I want to point out, I'm not going to be able to put out a video until Friday. I have to go out of town for the next couple days, and I won't be back till Friday, so my next video will be then. Okay, we're going to get right into the charts. And again, if you guys are finding value, let me know. Leave a comment below. Or if there's areas maybe you'd like me to improve, or different sectors or stocks you'd like me to look at, leave a comment. I do read those comments. So we'll start out today. I've got a couple things to point out. So triple Qs. Okay, so I know that a lot of people think the market will just never go down. And I understand that because the market hasn't gone down. Not for a big move down until, the COVID drop back here. And there's been dips, along the way. You can see we had a dip there, dip there, dip there. Each dip proved to be a buying opportunity. And that's just how it is. But that doesn't mean it's going to continue. So we want to continue to stay diligent, analyzing the charts for what they are, because if you just buy every dip, one of those dips is going to take you out. It's just a fact. And that's kind of the nature of how things go, especially when you run into a bear market. The reason why you have bear markets is because everyone gets lopsided for the most part onto one side of the trade. So after an extended bull market, everyone's long, everyone's bullish, and then there's only sellers left. So at the moment when the selling kicks in, it doesn't really matter about the fundamentals because everybody's long, and as the markets start to go down, there's just more and more sellers that come into the market. So that is just the nature of the market dynamics. So don't discount the fact that there can be down moves in the market. It's just, look, I know the Fed's in there, and everyone says don't fight the Fed, but the thing is that the Fed has been pumping markets. The Fed was stimulating, they were buying bonds and keeping interest rates low when COVID hit. And, COVID dropped the market, about 30% in the SPY. Okay, so after we get through that, let's look here at the triple Qs. We just hit a point of resistance, which was the former high, 382.87. You can see here on the daily chart, that was your former high. And the first tag of that, we got rejected. So we've got a double top as of right now. What I would look for, a break above that, should be bullish, and we'll start to hit all-time highs. The other thing to look at is if you break above it and hit all-time highs, usually when you're hitting all-time highs, that's not the time to be buying or going long. It's usually the time to look at profit taking. At least that's been how this market has been. You'll see here, every single time you hit a new high, there's been limited upside before a correction. So usually you want to look for the downside when you start hitting all-time highs. But what I would look for is if we hit an all-time high in the triple Qs and then we fail and break back below this 382.82 level like that, that would be your sell signal as far as I can tell, or a false breakout. So we'll watch that, see if that shows up. Other than that, the market is continuing to move higher. We did get rejected there at 382. So, we'll just have to wait and see. Well, another thing to notice is the PPO and the RSI, if they start to turn down, so like this and that right there, then that's going to confirm negative divergence, meaning we've got just another divergent high. And I know this negative divergence, seems like it never plays out, but in reality, the way that they typically go is the longer that a negative divergence builds, the more it's extended, then the bigger the move to the downside when you actually get it. So very, very similar to the COVID drop. We continued to have negative divergence building for quite some time. You'll see it right here. Basically, this is all divergent highs. And even right there, we just continued to build negative divergence, making higher and higher prices, while the momentum basically started to drop off and trend sideways. And you got the COVID drop there, which pretty much took out all those gains over the past, years, basically a year and a half or so. You took out all those gains in about 6 weeks, and that's how these big, long negative divergence plays out. So again, they just continue to grind higher. Everyone thinks there's never going to be any more downside. And then you get a big swift move to the downside and you wipe out all those gains. I'm not saying we've started that because, again, I don't see it in the charts right now. So I'm not really interested in being heavily short. Although I think there's a play to be made maybe at this level, this resistance level here at the all-time highs. So I'm watching the market up and around here. I think there's the possibility. Now, if you break above the all-time highs, you could stop out. And if you start to come back down, you could take a short position. That's what I'm looking at doing myself. And everything in this channel is just my opinion. Let's look at XHB. These are home builders. So home builders, this is a short trade. And we actually have an objective setup right now. A couple things I want to point out. So here's your trend line on XHB. You've got support 1, 2, 3, 4, and then we gap right down to there, kind of trade around, and then we break. So your sell signal really came. This is your nice firm sell signal right there back on. This came on the September 28th, and you got more selling there. Then we had a counter trend rally. Again, this market loves to do counter trend rallies. When it starts to move to the downside, there's going to be dip buyers. That's just the nature of that's just the nature of where the market's at and the fact that we're in a really extended bull trend. So anytime you get a dip, there's going to be dip buyers. So there's your dip, a big drop right there. Dip buyers step in, bid it up, and we run right into resistance. And you can see that trend line rejected once, twice, 3 times. We're getting a close. The sellers are starting to take over. So we're getting actually a big red candle and a close down near the lows now. So I'm looking for, it doesn't have to fail tomorrow, but I'm looking for some lower prices on this one now. I think we've likely backtested the trend line and going to start the next or a continuation of the down move, which I believe is going to look something like that. Okay. The other thing I want to point out, look at the negative divergence. It's continuing to, we didn't make a new high in price. So this didn't really run up and make a new high, a new divergent high. But we do have, look at the RSI starting to turn down right there. So we're already starting to turn down. The PPO hasn't quite turned down yet. So still pointed up. Just kind of extend that over like that. Still pointed up. But again, we had a sell signal. We had negative divergence back here. These were divergent highs right here. We got the sell signal. This is a counter trend bounce into resistance. Again, trading 101, go long at support, go short, or sell your long at resistance. And that's exactly where we're at right now. So this is an objective area to short. I re-shorted this one today, XHB. Again, I shorted it on the initial sell signal, covered at this when we kind of started to hold here when the market looked like it was going to hold up. And I'm re-shorting it back up here for what seems to be a move, or what looks to be a move, minimum target right here at 69.31. We break that. I think we're heading down to 65.70. Again, I think we're probably going a lot lower. I wouldn't expect just a small move right down to this support level and it to hold, although you'll likely get a reaction there. Okay, Tesla. So again, here's Tesla's trend line. You can see support. I've got them all circled. Support, support, support. There's more right through there. And there was your sell signal, kind of your initial sell signal. Now again, Tesla's a momentum stock. It's a mania stock. You get people that'll buy it at any price. They don't care. Well, they don't care about any valuations. They're just buying it because it's going up and they're making money. And those same people will sell as fast as they buy because it's going down. They have no fundamental reason for buying it. Some do, but for the most part, a lot of this is momentum trading, meaning people are buying it because it's going up, and as soon as it starts going down, they sell. So there's your sell signal, and then we got this big counter trend bounce, and then kind of a big stop raid, basically. They not a stop raid, but a short squeeze. Sorry. And yeah, they squeezed me out of my short, on this move. I got out just the other day. Luckily, I avoided most of this upside, and I got out early in the morning on the gap up. The momentum just looked like it was starting to pick up, so I bailed. But we did run it right into that trend line right there. You can see we're above it just shortly intraday, and then a big reversal came today. So we got sellers stepped in at midday and smashed this thing down, and we got a big doji candle. This is a kind of a reversal candle. Not a perfect one, but definitely, definitely some reversal price action. So what you want to look for to confirm that this is a reversal candle is you want to look for more selling tomorrow. So if some more selling shows up tomorrow, we get another red candle, and the bigger that red candle, the better. But you want to look for that, and if you get that, that's confirmation. The one thing I don't like about this, that momentum was pretty strong, and we pretty much took out any negative divergences in the RSI for sure, and not quite on the PPO. The negative divergences are still there. You'll see here we've got a downtrend in momentum, and we have a new higher high in price. So there's your that is a divergent high in the PPO. The RSI that has been burned through. So mixed signals on the momentum indicators. So I pointed out the things to watch for. Okay, 2 long trade ideas, Clorox and KHC, Kraft Heinz. Starting off with KHC. So we got a buy signal right here. This was your breakout, this breakout candle. So there's your downtrend on the daily. Accommodating that downtrend or accompanying that downtrend was bullish divergence on both momentum indicators. So you'll see here we're trending up in momentum, starting to move higher, higher lows, higher highs, and yet price continued to drift lower. Then you get the big breakout candle. Boom. This isn't random. This came, the divergences were showing that this was likely to happen. Now, it hasn't gone anywhere. We've got no follow through. We just had the breakout, and then we've just pretty much just drifted sideways. So, I'd like to see more price action to the upside. Obviously, it's been a little disappointing. It hasn't gone down, but it hasn't really gone up. It's just sideways. We got earnings coming up, it looks like, tomorrow. So if I had to guess which way earnings are going to take this, it would be up because of the divergences. I think it's likely we're going to break to the upside, but who knows? Earnings can always be a crapshoot. We could gap down after earnings, and then the buyers could step in and buy it up. Maybe it makes a new divergent low just down here below 35.32, and then the buyers are down there stepping in, buying it up. So that's things to watch for. But as of right now, I still like it. I think that we're likely going to trade up to 48.06 as a gap fill, which is this big old gap that happened back in 2019. And we got close right up here. They didn't quite fill it. So we got to pull back. I think we're likely going to move up and fill that gap now. And Clorox has been in a big correction. Again, I like to buy low and sell high. I don't like to buy at nosebleed prices and hope it continues higher. That's usually picking up nickels in front of a steamroller. So this one from the high to the low has corrected 33%. Down here at the low, we have bullish divergence on the RSI and the PPO, so momentum starting to move higher. And if you look at the weekly chart, we also have a big weekly trend line support coming off of 2011. There's your bull market, your longer term support line. And you can see we've come all the way down to it. We haven't broke through. So, if we do break, look for a recovery. And if we don't recover, then, something else is going on, and you might want to stop out of this one. If if this bull trend's going to break and we're going to start a bear market in this stock, you want to bail. But I wouldn't expect it to, you can see here intro week we whipped below it and recovered. You'll know if it's breaking because you're going to get a solid break, not just a little whip and then recovery. So as of right now, I still like it long. On the daily, we also have this short-term downtrend line right here that we've been watching. And you can see 1, 2, 3, 4, and then we're kind of pinched right there. And so I think we're going to break. I think we're likely going to break. Maybe it's waiting for earnings, but yeah, that's what I'm looking for. I like it long. Okay, GNRC. I still like this one short. We don't have a sell signal on the next move, but we do have a longer-term sell signal. GNRC, clear uptrend line coming off the March 2020 lows. Lots of tags of support. I have those kind of circled out right there. We had a sell signal. There's your sell signal with big follow through. And again, there's your dip buyers, counter trend rally. Rallied right into resistance. They recovered it a little bit, but we've been kind of chopping around. It's a big chop zone where stops are getting run, and it's just a big mess of a zone. But again, it looks like we're going to get rejected right here. What have we done? Well, on this counter trend bounce, we've run up and made a new high. which is a divergent high. So you'll see we're making new higher highs in price, and yet momentum, as I zoom out, continues to trend lower. See the momentum right here, the most recent momentum, it's lower than the former high. So less and less, we're making higher highs, new higher highs on less and less momentum. So that it doesn't mean that, it doesn't mean we can't continue to go higher, but it tells you that we're likely going to get rejected and move lower very soon, and we're right at resistance. So it's objective here. If you want to wait for a gap down or some sort of impulsive break, you could do that. That would make sense. But if we see that, then I would expect that we're likely, starting the next downtrend. Minimum target on this one, on the next break of this, in my opinion, is going to be all the way down here at 385.90. But I think we'd likely go a lot lower, likely all the way down here to 339.90. Okay, so that's a drop from where we're at. The first target would be about 19%, second target about 28%. All right, so that's what I'm watching for on that. I'm not short this one currently, but I am waiting for that breakdown, some sort of a gap down or an impulsive break. We also have earnings coming out here. So again, likely going to be the catalyst is earnings, but we got to wait to see that breakdown. Okay, silver and gold, and we'll wrap up here. So a little pullback today, but as far as I can tell, we just pulled right back to support and held. So silver, SLV, if I extend this trend line out, you can see we gapped down, ran down to that 2209, held it, and bounced off of that. And look at how we closed. That's a doji, basically. That means you gap down, and the buyer stepped in and bid it right back up, and we closed up near the highs. So I think that was likely the downside move, and we're likely going to continue to the upside on SLV. Gold, here's gold bullion. This one, or here, gold future shows it a little cleaner. We're in this uptrend line right here, and you can see we sold down today. Here's today's move on the futures. Sold down, hit support right there at 1782 and 50, and bounced off of that and held. So I don't see any technical breakdowns. All I see is an uptrend. We continue to hold support, and as we work our way higher, and yeah, I still think very near term we're headed up to 1830. Yeah, it's about 1837 on the futures, and we'll have to battle it out there most likely. But I am looking for a break of that. But until we see that, we don't have to anticipate it. GDX, clear uptrend line right here on GDX. You can see we're just kind of, you could probably make it something like that. If I go to the hourly, you can kind of tighten it up a little bit. Something like that. We're below it right now, but just barely. It's, that's not an impulsive breakdown. It broke and kind of drifted sideways. So I think we're likely gapping up tomorrow and going to continue on the upside. I don't know what the catalyst will be or why, but just as far as I can tell, the charts look bullish in gold, and gold miners look like they're going to continue up. And you'll notice across the board, some of the miners are down, some are up. It's a pretty flat day. Here's BT gold. Again, just up some more. And from the lows down here, this thing's up from the lows already up 36%. So again, these are stocks that are having outsized gains to the upside, at least in the last week or two. Massive gains for the most part. Here's IM Gold. Point this one out. You can see this thing rallied off of the lows, and it's up 39-40% already. So it's basically already recovered and back to prices that we saw back in March of this year. So good recovery so far in the gold stocks. Now, are they out of the woods? On for the downside, not yet. A little more work to do. Ideally for gold, I'd like to see a break of this level here at 1830. We break that, I think we're seeing all-time highs in the near future. So, and that's what I am anticipating to happen. Again, gold had bullish divergence. Everything that I'd look for in signs that we're starting the next leg higher in gold. And gold moves up, miners should move up even more. So that's the play right now. I like it. Probably my favorite sector. I'm long all kinds of miners right now. I've really spread it. The way I do it is I'll take larger positions in the majors, and I'll sprinkle smaller positions in some of the smallers and mid-cap mining stocks. Okay, guys, I hope you found some value. If you're new, check out my stock market technical analysis course. Link in the description below. Leave me a thumbs up. Leave me a comment. Catch you on the next one. See you guys on Friday.